So let's get into the commodities market space. We have quite a lot on our table today, and let's get Nosike Nwajide, who is a member of the economic think tank and a research analyst with financial derivatives company, is live at our global headquarters here in the studios to take us through this. Good morning, Nosike. A very big day on the central bank monetary policy side, but before that, we have quite a few headline-grabbing economic data. Take us through your burning economic issues for the day.
Obviously, news came out yesterday that the capital importation for Q3 fell by 7.78%. I mean, Q2 it fell as well. So it's a trend that we're seeing. Year on year, it actually rose, but obviously the effect of lower oil prices, even if we've seen oil prices average over 60 for the past 5 weeks, but reserves obviously have been dropping. The international investors are still wary of the fact that depreciation is a possibility, given lower oil prices and reserves that have fallen to
depreciation of the currency.
Depreciation of the currency, obviously, it's a possibility, given that oil prices have been lower and the
accretion to the
reserves have fallen
below
40. I mean, 39 is like a psychological threshold, and that's the reserves have fallen obviously because oil prices have been lower, and even where we've seen in advanced economies that they've been shifting to more accommodative monetary policy, the Fed has eased rates, the EU, the ECB have taken rates to below zero, and so obviously it gives more headroom for the CBN to keep rates where they are, but investors haven't really budged and have still been seeing basically capital flight out of the economy. So, and the reserves might continue falling if investors continue to see it that way. And obviously, oil prices have been above 60 for quite some time. There's the US-China trade issues that there seems to be light at the end of the tunnel, but
it doesn't look like a very bright light.
Yes, markets are
light,
fatigued.
Yes, phase one is still hasn't been hammered out. Phase two doesn't look like it's coming anytime soon.
Yeah, there's the issue of intellectual property with the Chinese, intellectual property rights, and the Chinese have finally budged to have some reform to that. And okay, the Americans are happy to hear that. So we think they'll come to the table, and we'll see how it plays. Our markets are a bit pessimistic, and at the moment, it doesn't seem the markets have that back of their mind. This might just be a meeting like all the others, and there might not be any light at the end of the tunnel.
But that would be a shame, really, ending 2019 without even getting the phase one done.
Yeah,
at least that would give everyone some hope for 2020.
It's something that has weighed on the sentiment on global growth for quite some time, and if obviously even the OPEC meeting of next week, OPEC have at the back of their mind that look, global growth is poised to slow, and one of the reasons for this is the trade war between the US and China, and that's obviously adding to global sentiment surrounding global trade as well. That's expected to slow down heading into 2020. So OPEC feels, okay, the demand for our oil is going to slow. We need to do what we can to prop up our prices, obviously.
This meeting will be crucial for Nigeria, looking at our comeback in terms of production, and if Nigeria's production will be a matter of discussion at the next OPEC meeting. But I just, by the way, let's drill down a little bit. What's your outlook on today's MPC decision?
The outlook is for MPC to hold rates, really. I mean, the key concern is inflation that has risen to 11.61. The last inflation numbers were 11.61. Then obviously reserves that are falling. We've seen growth growth for Q3 2019 rise to 2.28. It was bigger than expected. There's been.
Do you think that's encouraging?
It is encouraging.
So if we play the GDP by inflation, you think it's a hold? You folks think it's a hold?
Yeah, I think so.
The MPC won't be swayed by the Q3 GDP.
No, there needs to be a trend. Growth needs to be firmer. There needs to be.
But we had 1.94 in Q2. Now we had 2.28% in Q3.
Growth is still below population growth. So at the moment, the GDP per capita is still slowing. You need GDP growth of close to 3%. I mean, the economic growth and recovery plan had estimated by 2019 be 7%. So we're way
that's
off.
way in the skies.
Way off. So we need a trend of growth to above 3.5, 4%. I'm just being modest. That sustainable and would drag the economy as well, that produce jobs. I mean, you saw capital importation fell. If you dig down the numbers, the FDI that the FDI component of capital formation was the lowest component.
Yeah, $200 million.
That's
one of the lowest we've ever had.
That's one of the lowest we've ever had. That's the component that creates jobs, so to speak. So much needs to.
That's the part that really filters down to the consumers' market, to the commodities, not the portfolio investments.
Not at all.
And
the
all
CBN
of that
has tried to use a raft of policies and guidelines, the OMO restrictions and all that to reduce interest rates. It's had some success. The CBN has reported increased lending to the private sector. Obviously, that's good news. I mean, it's through its unorthodox policies, if you will, has managed to achieve that. But on the whole, it remains to be seen how sustainable these policies are. It remains to be seen the effect of these policies in the next couple of quarters. So I think the CBN would wait and see. Obviously, there's inflation, not just the numbers that came out, but the inflation expectations in the coming quarter, in coming months, the quarter, and even of Q1 2020. We expect that the implementation of a wage review across board.
I was about to ask what you folks at FDC are thinking and working on for the final month of the year.
Money supply and liquidity, and obviously the impact on inflation. We expect that inflation will rise to close to 11.9 by year's end. So that is a key consideration for the CBN. Obviously, then you have reserves that have been falling. They keep one eye on reserves. Obviously, there's global considerations, if you like. There's Brexit. There's the U.S. trade, U.S. and China trade war that they've got their eyes on, and oil prices as well that have been just around 63. I mean, anything could happen. They wait to see the impact or the effect, the outcome of the OPEC meeting next week, and hopefully Nigeria's quota, the events don't culminate in Nigeria having its quota cut down. So yes.
Yeah. Or they ask us to rejoin whatever. That's one thing everyone is. I'm just keeping one eye on that. But let's go back to the agro-commodities side of things. I'm sure folks are more also concerned about the end of the year and what happens to. This is when folks tend to eat more, and I guess it's the mood of the year that where thank goodness we're getting to the end of the year. So folks tend to eat more. So there's a bit of more pressure on agro-commodities towards year end into the early new part of the year.
Typically at the end of the year, prices of staples like rice. We have a rise in the price of rice. But this year, we've seen that rise already due to border closures and, border closures. That's the main culprit for the rise in price of staples. We think that some Nigerians will move away from those age-long staples. We've seen people moving from rice to spaghetti and pasta. Those prices have risen from about 25, 30%. Obviously, that may have some impact on the price of rice as demand falls and demand falls and you have more of the commodity available. But we still feel that it will be higher than in most years. Seasonality typically means that this time of the year.
What I'm looking at on the screen right now are some of the agro-commodities that you folks at FDC track all the time. Okay. These are some primary products for some of the local industries here. How are we performing out there as far as these key raw materials are concerned?
Okay, I'll take sugar, for instance. The prices are up 1.74% to about just under $13 a pound. It's been driven by, there's been higher demand in India. There's also been shortfall in supply. There were floods about a few weeks ago, and that's really impacted the output of sugar, and obviously the prices have risen. Cocoa, for instance, the prices have fallen. I think that's just a blip on the radar. The prices will rise in the coming weeks. The biggest producer in the world, Ivory Coast. There's been reports of less than average rainfall and increased sunshine, which will boost production in the coming weeks, which is good for output. Wheat, for instance, the prices have risen because prices are supported by lowest U.S. winter crop planting. It's the winter season, and I think heavy snow.
The winter in the northern hemisphere isn't looking good at all.
It's impacting the planting, so expect prices have risen now. Expect prices to rise in the coming weeks. Corn prices, strong demand in Brazil. Brazil is the second largest producer of corn. There's been some increase in
a producer and also a consumer.
Also a consumer. Yeah, because there are other uses of sugar besides consumption. Some people, sugar cane can be harnessed as a biofuel. As a biofuel. So there are other uses for that. So there's been increased demand in corn production. So that's impacted the prices of corn. So wheat, corn, and sugar rising, and cocoa falling. But that's just a blip. We feel that cocoa prices will rise in the coming weeks.
Any outlook on how our prices will? We're technically in this is the final week of the month, as it were. So do you guys have any outlook for us on market prices for some of our local commodities?
We think
just off the head,
the prices will rise for local commodities. Prices as we approach typically harvest season, prices should fall for local commodities, the tomatoes, the peppers, but for staples, staples that we still don't produce enough to sustain ourselves with, like the rice and gari, we feel like, well, we know that prices will rise in the coming, but not as much as it was a couple of months back.
So we don't see we'd not likely run away prices at the marketplace.
No,
will rise, but not so limpid.
Rise, but not as much as we previously thought.
Thank you. That's calming. Thank you.
Nasike
Nwajide, a research analyst and a member of the economic think tank at Financial Derivatives Company. When we come back, is the markets insight for the Monetary Policy Committee decisions expected from 1:30 p.m. today. Let's raise the curtain here on Business Morning, and we're back to you in 2 minutes. Join our analysts.